Hello, everyone. Welcome to this week's virtual Lunch and Learn. I'm Warren Miller, the Director of Sales and Marketing at Paradise Energy Solutions. And over today's lunch hour, we're going to be talking about financing solar with capital leases and operating leases. We'll cover the difference between capital leases and operating leases, the different terms, the benefits of each lease, and how they compare to other conventional financing options. And just for clarification purposes, we're not talking about residential leases or PPAs, but rather commercial and nonprofit equipment leases for solar. If you have any questions during any time during this presentation, feel free to post your questions or comments in the Q&A chat window, and we'll address them at the end of the discussion. With me today is Jonathan Crowley, a clean energy account manager at Univest Capital. Jonathan has over 9 years experience financing solar equipment, and he's been with Univest Capital since 2017. He's funded over $7 million in solar technology and has an average deal size of about $300,000. Jonathan's closed capital leases for both businesses and vendor contracts, as well as operating leases for nonprofit entities. Jonathan also, he hasn't slept in 3 months, and I'll let him elaborate and explain that. So with that said, it's great to have you. Welcome, Jonathan.
Thanks, Warren. I appreciate that introduction. Can you hear me okay?
Yes.
All right, perfect. So if you don't mind, everyone, I'm just going to kick this off with my presentation. So if you have any questions throughout, feel free to raise your hand or save them towards the end. And hopefully you guys will learn a lot more about commercial finance for solar systems. And at the end of this, learn more about how it can pay off for your business and be an advantage about. So to give you an introduction as to who I am and where I'm from and what we do in my business, I work for Univest Capital. We're backed by Univest Corporation of Pennsylvania, also known as Univest Bank. It's over 140 years old. It's located in Souderton in southeastern Pennsylvania. And we provide equipment financing solutions for renewable energy projects, both commercial and nonprofit. And our projects can be as small as $25,000, or they could be as large as $3 million. We go through quite a large target there. And as I said before, well, as Warren introduced, I do about $300,000 in terms of our average ticket deal. Univest Capital, we are headquartered in Bensalem, Pennsylvania. My office is in Westchester, Pennsylvania. However, regardless as to where we are located, we operate literally everywhere in the U.S. So if you are in any state in America, you can definitely work with us. I know Paradise is in Virginia, Ohio, Pennsylvania, Maryland, New York. Everywhere they work, we work. So regardless as to where your business is located, we will certainly underwrite and attempt to support your solar project. So to kind of kick things off here, I'm going to go over equipment finance basics, just a really basic definition of what we do. So we offer equipment finance through a lease, and the definition of a lease is right up there, a contract by which one party conveys equipment to another for use for a specific term, for a specific payment. And I just want you to remember, before we start off, lease is not a dirty word. A lot of people, when they hear a lease contract, they worry about end of term. They worry about what happens during the contract. There's been a lot of institutions that implement leases, and most of you may be familiar with either the vehicle industry or copier industry or something along those lines. We operate much differently than those industries. When we offer a solar lease, we offer something that is extremely transparent to the customer as well as flexible, and our interest is helping you monetize your benefits and use them to your advantage with your product. We offer 3 different products in terms of financing. We offer a capital lease to customer, which is our bread and butter, so to speak. This is the most common and most popular product that we offer. With this, the customer will own the equipment and receive title at the end of the lease term for either $1 out, where essentially at the end of your lease term, you'll own your solar system, or a predetermined balloon payment called a purchase upon termination, which can either be 10% of the total project value or 20% of the total project value. This lease term typically ranges from 7 to 10 years. However, what I advise people do, and we can certainly go into this a little more later, is to go with a 7-year lease, which is our most popular term, with a 20% purchase upon termination because that gives you the option at the end of 7 years to either buy out that entire portion immediately without any interest applied to it, or you can always make the decision to extend that purchase upon termination amount up to 2 years and refinance that equipment. So it gives you a lot of leverage, it gives you a lot of flexibility, and it allows you to kind of pre-plan as to what you want to do with your system. With the capital lease, it qualifies for Section 179 deduction and ITC. These terms mean, first off, the Section 179 deduction, this means that you can claim the depreciation on the equipment. And, you know, as I go through these terms and what you can do for your business, just want to kind of disclose I'm not an accountant. It's best to go with your accountant for your business and talk to you about these terms, but I can go over them in a brief manner. So you can qualify to claim the depreciation benefits of the system, and you can also claim the ITC, which for 2020 is 26% of the total project cost. So you can claim that as a tax credit. You also own all the energy credits with this product for the capital lease to customer. So you essentially own, you know, whatever value energy credits that you have, whether you're in New Jersey or Pennsylvania or Maryland or Washington, D.C. You know, there's several different states that offer a solar energy credit. And when you finance with this product, those credits are yours for however long you own the equipment. And here's something unique that we allow. The customer can reinvest the ITC back into the lease to lower future payments. So this is really important. So when you're claiming your ITC for this product, 26% of the total value, Univest does something really unique. We allow you to essentially claim that tax benefit, monetize it, or, you know, in other words, offer that tax credit to the IRS, and then use the money you would have already submitted for taxes to submit over to Univest Capital. And we will take that money and invest it back into the lease and apply it against the principal without any interest or any prepayment penalty. And essentially what happens there is we re-amortize the entire lease schedule, which is very unusual in equipment finance. What we essentially allow you to do is claim these benefits that are coming to your business. And for a lease, it's usually a fixed term, as the description said before, a fixed term for a fixed payment, but that isn't true with an equipment finance lease. Essentially what we allow you to do is either drop your payment, maybe it's $1,500 for the first 12 months, and then we allow you to invest the ITC at the 13th month, and it drops down your payment. Or we can start with a low payment and then anticipate you reinvesting in the 13th month to keep that low payment. Really, you know, if you're interested in this, of course, you can talk to me later, but I can show you a lot of different models where we essentially anticipate when you're going to invest this money back into the lease product and use that to maintain a low payment throughout the entire term.
Great.
Our second product is kind of the same as the first, just a different flavor, a capital lease to installer. So that's the installation company working with you. If they elect to own the equipment and have a side contract with the customer, that's a possibility that several installers that we work with allow. So at the end of the installer will own the equipment and receive title at the end of the lease for $1 or predetermined balloon payment like the previous one. However, your installer will be able to claim the depreciation as well as the ITC and invest them. They would own all the energy credits and benefits. However, they can reinvest the ITC back into the lease to lower future payments, and they would hold a PPA or a power purchase agreement or some kind of purchase contract with the customer. So that way, essentially, your installer holds the project and they're the lessee on the project, and they have a separate contract with you that may stretch longer than our traditional term of 7 years. And finally, our third product is the operating lease to the customer. This is a very unique product. I have not really seen that many in the marketplace offered in the same way that we offer it. It's essentially one in which our bank, Univest Bank, will own the equipment. We'll claim the ITC for you and invest it to buy down our interest rate that we're assuming that we would make on the lease product. And then at the end of the term, you can purchase the system or refinance the remaining balance or return the system. Obviously, we're not anticipating people returning a solar system after making 7 years of payments and having a small residual value at the end. But that's always an option for you. However, what we're assuming most customers will do with this is either purchase the remainder that's left over, which is usually about 12 to 15% of the total project cost, or they can refinance that remaining balance for up to 2 years. this is a fantastic product. However, my bank has a limited tax appetite or a limited ability to claim tax credits for customers and invest it to buy down our interest rate. So it's only available for nonprofit, tax exempt, and employee owned entities. So if you're a municipality, a school, if you are involved in an organization, like let's say you're a YMCA, or let's say you're a business that can't claim the tax credit because you're employee owned. There's 300 different people that all own a share of the business, and you can't possibly organize everyone to claim the tax credit. That's the kind of base that we're looking for. That's the kind of target audience that we want for the operating lease, and that's who it's available for. And with this, it's a very unique offering because you still own all the energy credits and other benefits. You just don't own the ITC or the depreciation benefits, which you can't claim otherwise. But you still get all the energy credits that you're able to claim through whatever state program that you adhere to for the product. And our typical structure for this operating lease, it varies from customer to customer because it varies on system size, equipment costs, and several other factors. However, the typical structure, the average, is 7 years. The high average is 2.5%, but I think it'll be lower than that with a 15% residual. And at the end of this term, all you have is that residual value. So you can either elect to purchase the system or refinance it. But the great news about this option is you will own your system and have all the benefits that come along with owning it. So a typical solar finance, I've spoke about capital leases and operating leases, but obviously there's several ways to finance your solar system. I'm going to go over the three most popular methods in which people use. A loan, which is a product that's available at a fixed or variable rate. It typically requires a significant deposit up front. There's significant underwriting time for a loan, and ownership is not guaranteed throughout the term. And what I mean by that is a bank may start a loan for your system, and they may sell essentially that product like they would sell a mortgage to another bank. With Univest, when you have your product financed by us, it stays in-house for the entire term. Cash. I mean, who doesn't love cash purchase? It's great for the installer. Obviously, you're going to see a significant return on investment, but it's very difficult to leverage enough capital to purchase a system outright, especially at a time like this when most businesses are trying to conserve it and hold on to as much capital as possible. So it's considered a tremendous investment. And I've had companies before go out and buy a system for $800,000, $1 million, and then they turn around and say, oh, we really wanted to hold on to that capital to invest in other parts of our business. Could you please refinance our system? And sometimes that's an option that's available, and sometimes it's not, but that's not really something I'm going to go too deep into with this presentation. And finally, credit line. If you're a commercial business, if you're a nonprofit entity, odds are you already have a relationship with your local bank and you have a credit line. However, you only have so much exposure in your credit line for improvements to your business. So with the solar system, is it something that you really want to spend the majority of your credit line and your exposure with your bank on? Or is it something you'd rather save that credit line for other expenditures for your business, such as marketing, payroll, or other improvements? But meanwhile, you can rely on my capital lease to finance your project. And I like to call my capital lease a low impact finance product because it's not going to use up your exposure with your local bank. And we're not going to require a lien on the business or a blanket lien on all of your equipment. The only thing that we place a lien on with our product is the solar system itself, and that is it. So with your cash option, your loan, your credit line, there's something that all three of these options have in common. They aren't structured around your unique credit profile. They aren't structured around how many kilowatts of energy that you're saving on a given month, or how many energy credits that you're receiving, or how you want to start your payments, how much you want to refinance, how much you want to structure over 7 years. Really, all three of these options, a solar system is the same line item as if you wanted to purchase a new truck for your business, or purchase roof improvements for your business. It really doesn't make any difference to them. The key thing about working with Univest Capital is that we understand that solar is a very different thing to add to your business than any other expenditure. So what we try to do is understand what your business is looking to achieve with your solar system what you're able to claim in terms of tax credits or depreciation, and how to leverage that significant tax benefit to your advantage by buying down the principal for our product and keeping your payment low for 7 to 10 years. So let's go a little further into that for custom customer finance. With our system, we offer a lot of transparency. You see where you're going. You have a roadmap for what's happening in terms of financing your solar system and, you know, investing whatever benefits you can to help keep it at that low payment. But also we offer a few other things to really make it work well with your business. First off is deferred payments. If you pursue equipment finance through Univest Capital, our typical deferment time is 90 days. So what occurs is once you sign our contract with us, that begins your lease, because we're going to pre-fund your product and essentially move money over to Paradise so that they can start their project. However, you're not going to see an invoice from us until 90 days or 120 days or, you know, even 180 days later into the project. And the reason for this is we want to have your system up and running and you seeing the utility benefits before we start invoicing you. And this leads to a level of comfort, because if you're being promised that you're going to have a certain amount of utility savings or a certain amount of energy credit income, well, if we start billing you at the very beginning of that project before your system's up and running, you're getting double essentially what you were expecting to save, because you're still going to be paying your utility company and you're still going to be paying us for invoicing. So we offer deferred payments as like kind of a transition bridge to go from, you know, relying on your utility to essentially Univest Capital becoming your new utility company or your new utility payment that you'll make until you own the system. Quotes estimating ITC investment. We understand that you guys are going to claim 26% this year, you know, and that's going to factor into the total product. But we really want to understand from your point of view, and maybe after a discussion with your accountant or your CFO, you know, what exactly are you looking for in terms of this tax investment, and what can you return and place back into the principal? And what we do is we determine when you can claim that tax benefit and when you can invest it. And by using that model, we can generate an estimated payment throughout the entire contract if you were to invest at that point that you said you could. Balloon payments, as I mentioned earlier, you can have 10 to 20% purchase upon termination, which I know a lot of people are very adverse to balloon payments because it's kind of, it feels like, you know, something hanging over your head that you got to worry about 7 years into the future. But Univest Capital is not going to show up at your front door and say, give us 20% of this total project cost right now. We're not going to send you an invoice for that. You always have the option to refinance that balloon at the very end of the term, or if the benefits and, you know, the income is so advantageous from your system, you can always buy out that balloon payment before you even get to the end of the term. But either way, we're taking 10 to 20% of that total project and essentially sheltering towards the end of the lease. So you can either elect to pay that out before you get to the end of 7 years, or you can always elect to refinance that option, or you can just pay it at the end of the term. Utility match pricing is difficult in some states and it's easier in some others. And what I really mean by this bullet point is when I talk to a customer and see a proposal for their project, what I want to understand is how much you're saving in terms of utilities with this solar project, and what energy credits or state grants or other income you're going to be receiving, and essentially create a number that you're going to be bringing back to the business through both savings and revenue generated by the project. And my job is to try to get as close to that number as possible by either shifting your ITC contribution, or maybe putting a deposit at the beginning of the lease, or maybe strengthening, you know, the purchase upon termination, making it a larger amount. Essentially, it's somewhat of a puzzle for me to figure out, but I'm very happy to do so and find out exactly what you're trying to accomplish and the best way to achieve that through being flexible and offering you all the items I mentioned above. And again, you know, I'm the single point of contact over at Univest Capital for all these questions. You're going to see my contact information at the end of the slides here. But if you have any questions about your lease, you know, I'm going to be here to support your business. You know, I'm always available for quoting and application questions and underwriting. However, throughout the term of the lease, if something seems, you know, like it's not making sense, or you want to maybe reserve your ITC or place it earlier or later in the lease, I'm always available for any questions that you might have, either about the invoicing you're receiving, the contract you signed, or how you can impact your finance product to better benefit your business. So what we see a lot in the commercial solar and nonprofit solar world is essentially businesses using a loan versus a lease. This is the key competition in the field of finance. You have your local banks that are offering loans, which are at a very aggressive interest rate for the time being. It typically goes for 10, 20 years, however long you want to stretch that term out to. And you have a lease, which is at a fixed interest rate. It's a shorter term than the loan. However, it's a lower financial impact than the loan because it's not going to use up your exposure that you have with your local bank. So I'm just going to go through a few items that really differ. And sometimes a loan is a better option for you, but sometimes a lease might be a better option for you. Obviously, I'd love to underwrite every one of your projects and offer you a lease, but sometimes depending on where you are, depending on what you're saving, depending on your relationship with your bank, sometimes a loan might be the best way to go. But let me just kick off a few differences here. With a loan, you have limited financing most of the time. Not all the time, but most of the time. They may only agree to finance 80% of the project, or if you want to include, grounds improvements such as trimming a tree to, reduce shading on your panels or improving the roof. These things may be, disregarded or outright rejected by your loan product. With a lease, we offer 100% financing. We will finance the solar system. We'll finance the roof improvements. We'll finance any kind of additional training or utility connections that need to happen. And of course, like I mentioned before, if you have any trees that need to be cut down or project improvements that need to occur, we can roll it all up into one finance solution. With a loan, you might have a variable rate. I mean, there's fixed rate loans, but some loans go with a variable rate. And as we notice at this time, there's a wild amount of fluctuation that can occur with interest rates. So you can always start off low with a loan for 5 years, and then it can be reviewed after 5 years as to what the bank's position is with that interest rate. But with a lease, it's a fixed rate. It's always going to be that interest rate throughout the entire term of the project. And you have the benefit that you can always invest the ITC back into the principal and lower the amount of principal that interest rate is being applied to. With a loan, you're often looking at some sort of collateral, real estate collateral, a position on the business, some kind of blanket lien across the business. And when those liens are filed against either your business or the collateral or something along those lines, you're using up valuable assets to obtain financing for your project. With a lease, the equipment is the only collateral. And obviously that puts us at a higher risk than the loan. So our interest rate will be higher than your typical loan, but we're just tied to that solar system. So even though the interest rate may be a little different, if the lease is providing you with a cash flow solution that works for your business, maybe it's better to tie the lease just to that and then retain your loan for other improvements that you're looking to make to your business, or maybe use it as a reserve capital to kind of help your business in case of any kind of emergency or anything occurs. A loan, you're looking at 2 to 4 week underwriting time, 2 weeks if you're lucky. There's a significant amount of work involved in underwriting for a loan because they have to review your current assets and where you are and your exposure. With us, as long as you're below $500,000, we can give you a 2-day underwriting time, but that's when we're all in the office. I would say we're closer to a 3-day underwriting time to possibly 4 days since we're all working from home. But we can turn your project around really quickly and essentially say, okay, we reviewed your financials, we reviewed your application, we're ready to go, we can move forward. With a loan, typically you're looking at a deposit needed. Lease, no deposit needed. We're the exact opposite in terms of needing a deposit at the beginning of a loan. We're not going to ask for 10% of the project cost. We're not going to ask for 20% of the project cost. The project costs aren't going to start as soon as you start the lease because that's where the deferred payments play in. We're going to do the exact opposite of that. We're going to say, pay us nothing until the estimated time at which we assume your project is going to be completed. Then we'll start invoicing you. With a loan, you're looking at variable documentation fees. I mean, 1 to 2% of your total project. That can be pretty significant depending on the size project. For a commercial lease, for $500, the only fee you will see involved in our entire product. And that's what I really kind of mean by transparency and playing into transparency with the customer. We're not going to play a game where we move the documentation fee back and forth depending on the size of your commercial project. The $500 documentation fee is just that. It's a flat fee. There's no other fees, and we file a lien against your equipment, and then we begin our lease. So it's very straightforward. So, you've been listening to me, go on and on about what we offer and how it can work for you. And, that's great, but it's sometimes difficult to visualize exactly how a lease plays out and how it works for your project. So I came up with a little example here based on a customer that we had over in New Jersey. So the customer wants a $372,000 system, including roof repairs. So it's an all-encompassing solution. The work is expected to take 90 days from the beginning to the PTO, the permission to operate, which is essentially when your utility says it's okay to energize your system and connect it. The problem is you don't want to make any payments until the system's completed. You don't want to make any kind of investment until you see guys up on your roof working, completing, and getting the actual thing running until you spend a single penny on the project. And you don't want these payments to impact your cash flow. You want the whole thing to cash flow from day one. You don't want to go out of pocket for any expenses. You want a solution that's going to work for you. So your electrical savings from the system is anticipated to be $3,100 a month. And since you're in New Jersey in this situation, you're expected to make about $23.56 a month in T-RECs or energy credits that are over in New Jersey. So here's our solution that we can offer with financing. We can offer you a 90-day deferred payment schedule where you won't pay a dime until the 90th day after you sign the contract. And then we can provide you with a step lease. And a step lease is something that I described earlier, but I didn't label it as a step lease. It offers 84 payments at $37.24 a month. And what a step lease is, it's essentially we're going to offer you $37.24 a month, and then we assume that you're going to invest the ITC back in the 13th month. If you don't invest that ITC back, your payment will go up again. So it'll go up and above the $37.24. And then we're going to have the product end in a 20% purchase upon termination, which can be refinanced at the end of the term or bought out before. So I kind of put a little example down here. So it's $37.24.11 a month, and you're going to be saving $17.31 a month, or you're going to make additional revenue from the energy credits with the ITC invested. But let's say you wanted to hold on to the ITC and you didn't want to invest it into the project. In this scenario, you'd still be saving $400 a month without the ITC invested. So it's really up to you as to whether you want to invest or not. If you want to, we can plan for that. But if you prefer a straightforward lease where you can always drop in the ITC or buy down the principal, we can also structure that for you as well. So the other benefits that we're offering with Univest Capital is we'll work directly with you and your associate professionals, your advisors, members of your team over at your business. I've spoken to lawyers, accountants, CEOs, CFOs, office managers, people in charge of utilities, whoever you need me to speak with to understand your project and understand what you're trying to accomplish, I'm more than happy to do so. You'll know exactly where your deal stands as well. So if you submit your application, and I'll go into what an application is composed of in a little bit. But once you submit your application, you can call me at any time or email me and say, hey, Jonathan, what's going on? Where are we? And what are we planning to do about this? When are we planning to start the project? And for an application with Univest Capital, we're very simple in terms of what we need to underwrite your business. We will need an application, 2 years of tax returns, a profit and loss sheet for the current year, as well as a balance sheet. And if we have those 4 items and we don't need any other additional information, that's when we can typically stick to our underwriting time of 3 to 4 days. And so this is we will pay your business. We're not going to be paying you. We will be paying Paradise in this situation directly. But we pay your installer in a structure similar to a cash purchase, which gives you a lot of security with your investment. Because essentially, let's say I'm going to pay Warren 25% once you sign the paperwork. That's great. Warren can use that 25% of the total project cost to obtain permitting, get engineering started, make a prepayment on the materials. And we're going to give you a call after that contract is signed and say, you understand everything in this contract. Did you speak with Warren? Did you understand that this is going to start as soon as you sign it? And once you get that okay, then Warren can start doing whatever he needs to do to start your project. And then we may have another 25% saved for when he starts the project. But we'll still give you a call and say, hey, Warren needs to order materials. He needs to get them over to your place of business to start construction. Is this what's occurring? And if you say okay, we'll wire another 25% to him. And then to finish the project, we'll give him another 25%. But again, we're going to call you, say, did he finish the project? Is it all done? Great, give him another 25%. And then save the final 25% for permission to operate when the utility gives the go-ahead and says, your system's energized, the grid's ready, your project's working. We'll give you a fourth and final call and say, is it okay to send the payment to the installer? And this gives you, the customer, a lot of security. It gives you an idea as to what the progression of the deal is. And we need your verbal authorization to move forward with this project. So that way, you know exactly what's occurring, when it's occurring, and you have the authorization to disperse funds to the installer. And Univest Capital is also available around the clock for supporting and quoting. I say around the clock, and as we work from home, I'm sure we all recognize that that means something differently than when we're all going to the office. That means that you might receive an email at 7 o'clock, 8 o'clock, and get back to it the next morning. But if I'm available, I have my phone on me. You call me, you email me anytime, as long as I'm awake and available to take your call or look at what your project is. I'm more than happy to contribute and hopefully answer your questions. And the final benefit here is I'm able to go over documents with you and deliver them in person once this pandemic is over. But for the current time being, we could have a Zoom call, we could have a Skype call. I can go over every single page of our contract with you so you understand exactly where you are, what you're doing, what the terms are, and what our contract encompasses. So, my marketing department kind of made fun of me because I was going out on the road a lot, getting these signatures signed and, getting the paperwork completed. So made a little, it makes fun of me sometimes, but that's okay. So in summary, I'd love to be your go-to guy for leasing. I know that was a significant upload of information. I'm sure you guys have questions. So whatever questions you may have, whether it's about solar, whether it's about equipment finance, about what we offer for solar, here's all my information. Feel free to call me on my direct line. Feel free to shoot me an email if you have any questions or if you want any more information on what we offer. And I'm always happy to either just take a call if you need to speak or schedule a call and help you guys understand what we offer and hopefully help me understand what you're hoping to accomplish with your system.
Great.
So I'm going to turn it back over to questions. So I think Warren had a few for me.
Absolutely. Great presentation, Jonathan. Thank you for all of that information. If we could just quickly go through a summary and we'll get to some questions, just so I understand, and if you can help me bring clarity to this. In terms of the capital leases, they're primarily for your for-profit businesses, and the customer gets to take advantage of both the federal tax credit, the 26% tax credit, as well as the depreciation, and they get to keep the SRECs. That's correct?
That is 100% correct. They get all of the benefits of the system.
They get all of the incentives, and they get to take advantage of a loan or a lease that helps it cash flow for them as well. And they get to the flexibility of reinvesting the ITC or the tax credit if they so choose.
Absolutely.
And then for nonprofits, you have the operating leases, which allow Univest Capital to take advantage of the tax credit, but pass some of that tax savings onto the customer through the cost of capital. So the customer gets a lower interest rate because you're able to utilize some of those tax savings and pass them on to the customer.
Absolutely. And when I said that we were looking at a high average of 2.5%, there have been some scenarios for nonprofits where we've been able to achieve interest rate of close to 0% for their projects, especially on one that we worked on together, Warren. So, we're definitely, we want to partner with as many, nonprofit, community-oriented organizations And our operating lease is the means to do that. We want to help you if you can't claim tax credits. If you're an organization that really wants to go green, but you're missing out on literally 50 to 60% of tax benefits, we'll step up to the plate and claim your ITC and buy down your interest rate, and you'll get a really, really low interest rate for your lease, and you get to enjoy all the other benefits of ownership of that lease.
Yeah. And while we're talking about operating leases, there's a misconception out there, and maybe you could help bring some clarity to this around FASB 19 and the fact that operating leases are off the books or off the balance sheet. Can you clarify that for us?
Sure. So, I mean, it's difficult to understand what is on and off balance sheet because, I've been working in finance for the past 9 years, almost 10 years now. And it was always, to us, when we were financing equipment, it was as simple as capital sheet on, capital lease on the books, operating lease off the books. However, with FASB 19, it seems to be a large blurring of that line. And while I can't give my direct verdict on that because I'm not an accountant and I'm not a CPA on how that affects the business, it appears as if they're both being treated in the same way. However, that varies depending on what type of organization you have, whether you're a corporation, an LLC, a nonprofit. Various different regulations apply to different players and different organizations. So, I would advise all customers before we engage in our contract to find out what they can really write off and what essentially they need to be held accountable for from a balance sheet perspective.
Excellent. Great. And then we have a question here. Are there, other than, and I assume this is with regards to the capital lease, other than reinvesting the ITC back into the loan, are there other prepayment penalties if somebody wants to invest, put back more money or prepay the loan early?
Well, that's why I advise customers to take the 20% purchase upon termination, because with a lease, you really can't invest. There's no advantage to investing past the ITC because we allow customers to go up to 26%, possibly 30%, depending on when the project starts, back to the principal to buy down the principal. However, if you were leasing a car, you would understand, if I have a $300 a month payment and I pay you $600 a month, that just takes care of another payment in the future. It doesn't buy down the principal. And that's the same way it works with a lease. There's no prepayment penalty, but the interest rate is going to apply. We're still expecting our, 84 payments of $1,200. And the only thing that's going to change that is investing into the principal. And the other thing that changes that is putting a purchase upon termination at the end of the lease term. And that way, if you do run into benefits, you can always chisel away at that 20% or 10% waiting at the end of the lease before you get there. So that's a way to turn your depreciation benefit into something that helps you with your system and help balance it.
Great. And then with regards to the balloon payment, the residual payment, is that going to be at the same interest rate as the lease payments?
No. So the balloon payment, when you get to the end of 7 years and you choose to refinance it, it's going to be at that interest rate. We can't anticipate where interest rates will be in 7 years. So we can't say, okay, this is going to be at, 4 or 5% in 7 years. We don't know exactly where that will be. So it's kind of up in the air as to what happens in 7 years. We can't determine what interest rates will be, but it will be at whatever current interest rates are. So, we can maybe give a projection if conditions are similar or they've changed 7 years in the future, but we can't give an accurate prediction as to what it would be if they refinanced it at the end of the 7th year.
Great. Excellent information, Jonathan. Thank you for that. Please don't forget, if you have questions for Jonathan, enter them into the chat window, and we will we'll address those if any more come in. Those are all the questions we have at the moment. So let's just like to take a moment to thank everybody for your attendance and your participation today. Remember, if you'd like to schedule a virtual call with the solar expert, just type schedule a meeting into the comment section or go to paradiseenergy.com/webinar and you can request a virtual site visit there. Also, if you'd like to talk to Jonathan further and you didn't capture his contact information, just type Jonathan into the chat window and we'll make sure to send you his contact information, or you can call him directly at 484-913-1595. And finally, if you've enjoyed this Lunch and Learn, you'll want to join us next week. We're going to be talking about buying and selling property with that has solar on it. And we will have a guest speaker, Roger Sampson with ERA Martin and Associates, who will be helping us talk through the impacts of solar on real estate. So we hope you found this valuable. Look forward to seeing you next week. And again, thank you very much, Jonathan, for your expertise and your help today.